How to start swing trading as a beginner the easy way. Now, some of you might ask yourself, but what exactly is swing trading and what is the difference between day trading? I want to share with you my personal story as I started trading 10 or actually 11 years ago. As I first started, I started with day trading actually. And unfortunately, that required a lot of time, a lot of focus. And back then I was in Europe and I really didn't have a lot of time to devote because I was working a full-time job. And so what happened is I became very sloppy, ended up with a lot of drawdowns, made pretty decent amount of money at the beginning of the week, gave it all back towards the end of the week. And so one day, really something weird happened to me. I was day trading the Apple stock, and for some reason I ended up break even towards the end of the week on that stock. And while I was analyzing my trades on the weekend, I realized that Apple went actually 10% up for the whole week. So that was a huge move. But yet I was not able to capitalize on this move because I was day trading. I was in and out of the trade, not being focused, taking losses, making small wins. And for some reason, I ended up break even. This was for me a wake up call to figure out how to hold these positions for a little bit longer so that I can make money while I'm actually working and doing something else. And luckily I devoted my time to learn swing trading, and today I want to share with you how that works so that if you're even starting or if you are working and you want to involve that as a part-time strategy to grow your account and generate some extra income, I think this is the best way, by far the best way to do that. What I'm using personally is no more day trading because all of my swing trading profits made up for my day trading losses. So obviously I cut day trading out of my trading style. The way I'm doing it is I use the daily chart, and if you're just starting right now, the easiest way to start with and the best instrument is using the S&P 500 or the NASDAQ ETF. So because the ETFs are a little more expensive, they might not be perfect if you don't have a big account. What works really well is using the leveraged ETFs. These ETFs are 3 times ETFs and they're moving 3 times faster, 3 times the returns per day compared to the S&P 500 or to the NASDAQ, which is the Qs. I'm going to show you in a moment how this exactly looks like and what to look for, but just to summarize it, they're cheaper, they move faster, and you have enough volatility in movements with these instruments. That is the number one reason I would choose them. The second reason is that you're already focusing on the market itself. There is nothing easier to trade than buying the S&P 500 or the NASDAQ. You really don't have to devote too much time into individual stocks, try to learn about their fundamentals, try to learn about what's going on in the company. I was a stock picker at the very beginning, and what ended up happening is that I made some really good profits on some stocks, but some of the stocks that I've been picking were not performing well and chewed a lot of my profits because I had to realize losses on them. A lot of times I would buy a stock just to see that the market goes on and up every day, new high after new high, while the stock I picked was doing nothing, pretty much sideways. And so this happened to me so many times. I got sick and tired of it, so that I decided this is too hard and too much work because you have to analyze the individual stocks. You must know what are their earnings, when are they releasing earnings, so you don't get stuck in a gap up or in a gap down throughout this time. And you just don't know pretty much what's going to happen with an individual company. A company that is doing well right now might start doing bad in the next quarter, that you're going to start seeing a bigger draws and pullbacks. While the market is always easier because that's a basket of stocks. S&P 500, think of that's the 500 stocks in the US. You're trading already these stocks. You don't have to look at individually at each one of them. So you have one worry less, and plus the market is always being saved by Fed. Think about it. Always when something is going on, they're gonna cut rates, something is gonna happen, a bad stock is gonna replace with a new stock in the index, and you're always pretty much on the winning side. So when it comes to swing trading and starting, this is the number one instrument to go with, S&P 500 or the NASDAQ, or in other words, SPXL or TQQ. Now I want to share with you on the chart what exactly am I looking at and how you can capitalize on that. So what exactly I'm looking at is the daily chart on the Nasdaq or on the S&P 500. In this example, I'm going to go with the Nasdaq because this is my go-to favorite instrument to trade, because I like trading the tech sector. It has a lot of stocks, very volatile and good stocks actually for trading. As you can see here, this is here the QQQ. This is the Nasdaq 100 index, and that is here the daily chart. What we're trying to do is we're trying to take all these swings to the upside. You see this green swing, we're trying to take that from a correction and from the bottom. So all we're looking at is for some kind of a pullback or correction towards the support area, some kind of a reversal candle that gives us the indication that this is about to reverse and try to go higher. And this is our entry, and we're trying to take one big swing after the other. Now, because the QQQ costs $460 right now, that's for a lot of small accounts, a little too steep. And so what I like doing is, instead of trading the QQQ, I like to go to the TQQ, which is again the leveraged ETF, the 3 times ETF. So that right here is the TQQ chart. As you can see, it costs 59 bucks. It is much more doable if you have a small account. I'm looking for a few days in a row pullback on the daily chart. So that could be like 5 to 6 candlesticks in a row pullback, and this is enough for me to just know that the market is about to reverse, and I'm looking for some kind of a reversal candle. Again, the strategy is absolutely easy. Unfortunately, most people like overcomplicating, so I really like keeping it simple, because simplicity is what has made me a pretty good amount of money, and I like sticking with something that I understand, and that I don't need hours and hours of research to make a simple decision. So what we're looking at is a few days in a row pullback, first green candlestick. In this case, the entry is here above that, and the stop loss can be placed just here underneath below, and we're trying to take one big swing at a time. As soon as that swing is over, we're looking for a re-entry. For example, you see here that red candlestick, it's a bearish engulfing candlestick. That gives us the clue that there are more bears stepping in, more sellers are stepping in here at the top, and potentially the market is going to pull back. So this is exactly what happened. A few days in a row pullback, and after that a doji formation and candlestick. This doji formation shows us that there are more buyers stepping in here around the 50 moving average, and that the market is about to reverse and pick up the direction towards the upside. So this right here will be our entry, and you can put a stop loss below. A stop loss means that you're going to get stopped out and get out of the position if this does not work in your favor, and if it does not do whatever you thought it is going to do, which could happen as well. So you protect your capital. Risk management is very important. Same thing here. Remember, the rule is 3 to 5 days in a row. So we had 3 red days, a nice move up. In this case, the market turned around and made a bigger and deeper pullback, and this is normal. That happens after a big bull run, especially if you think about that throughout the whole year, the market has been going up all the time. So it's absolutely natural to see a little bit more of a pullback like we saw here. And so the market dropped. We had here a little more issues going on with the Japan interest rates, carry out trade, and all that stuff, and made a big bounce. Right now, it pulled back right around the 200 moving average, which is acting as a support as well. And so it is trying to close green. Now, is there a possible entry? We will have to see how it closes today. But let's say the market closes green, everything looks decent. A potential entry could be above that candlestick and a stop loss just underneath, so that we can take a potential move here from here to the upside again. So that is the idea of swing trading, taking a leveraged ETF that is not expensive for your account, focusing on 1 to 2 instruments so that you can go on with your life, and then trying to capture big moves out of it. And especially it is very easy on the S&P 500 and on the Nasdaq, because these are indices that normally and statistically over the long run are always going to go up. I hope this video helped you a little bit, and if you're wondering where should you start day trading or swing trading, in my personal experience, swing trading has been the best option and the best, especially if you're working or just starting. It's much easier. Thank you so much for watching, and I'm looking forward to see you back here again.